Hi everyone, Juan Finance here, and thank you very much for coming back. In this short video, we're going to cover portfolio review and rebalancing for the year end 2021. So why do we need to review and rebalance our portfolio? So we have here three basic reasons. Number one is to measure the performance versus the target. So if you're aiming, let's say 10% or 20% ROI per year, then you have to look back the performance of your portfolio in 2021. If you know, were you able to achieve it, or do you need to do something about it? And then second, you have here emerging themes. Now in 2021, we actually considered some companies or assets in the chip shortage and supply chain constraints theme because of the pandemic. So moving in 2022, we're actually looking for assets or companies that would benefit from rising interest rates and addressing inflation. Evaluate strategies. So you have to look at what you've done in the past 12 months and then try to evaluate it, assess whether those are actually effective or you need to tweak your strategy in 2022. So here's our multi-asset portfolio for 2021 review. This is actually composed of 20% cryptocurrency, 35% ETFs, and majority 45% is actually allocated to direct stocks, which actually covers mostly tech. If you're going to look at here, we have some electronics, fintech, semiconductor players, and REIT, just to give you the fund consistent payout. So we actually considered some REITs there. Now for crypto, we used only 20% just to hedge for or versus inflation, since we are considering crypto assets as less correlated with the broader market. And then for ETFs, we have here bonds, commodities. We also have here the Nasdaq 100 and energy and oil, and also semiconductor. So for our holdings, if you're going to look at here, we have um, 30 assets, and our top players here are DGP giving us 8.97, AMZA 8.43, and we have uh, Umicore at 6.52. Now, luckily, our top holdings or top performers here are actually giving us um, green figures. And if you're going to look at here, DGP, for example, is an ETF that tracks commodities market, so more on commodities. If you're going to look at the basket, it's actually composed of some assets in the oil sector. We also have here agricultural commodities and even gold and silver. Now, the second top performer, we have AMZA. AMZA is actually more concentrated on energy and oil sector. And the rest here, we have individual stocks trading in the European region. So for a very quick market update here, this is as of December. We have the US inflation actually rose to 6.8, and then this is actually among the highest figures since 1980s, I guess. And then although their GDP, this is actually expected that their GDP would rebound because of a very low base in November. So that's why we have here 128. But if you're going to look at the yield curve here, on the 1 year, that's 0.26. It actually moved to 0.38, the same manner with a 5-year tenor from 1.2 to 1.26. Now, what is the implication of this one? If you have your bond or fixed income in your portfolio, and if you're able to view some of our videos here in bond valuation, if interest rates would move higher, prices um, prices would tend to go down. So if interest rates move up, prices would tend to go down. So if you're holding bonds in long duration, probably you will feel this drag in your portfolio. So in our strategy moving forward, we are only considering short-term bonds with short duration for at least 1 to 3 years, just to avoid the volatilities entailed by the rising interest rate. Now for Eurozone, they also have the same scenario here. Inflation rose to 4.9. So the main reason on, you know, on these figures rising is because we have the vaccine rollout. We have, people now spending and creating more demands of goods and services, and economies around the world are actually reopening business. So that's why you have here mostly inflation across the globe are actually picking up. Now we also have captured here the Russia and Ukraine conflict. This may pose a threat in global trades, particularly in oil, maybe, and relationship of Russia and U.S. allies. We also have here China issues on the Philippine Sea, together with the neighboring countries here, Vietnam. And for China alone, we have here the continuous crackdown of the government to tech giants, crypto players, and even some fintech and edutech, or yeah, educational institutions going online. So they were able to um, impose restrictions to those business models, and they were actually dragging the prices and creating more volatilities in the space. So what's our portfolio strategy for 2022? Here we have improving the cash buffer for the possible volatilities ahead due to the tapering cycle of most central banks across the world. So we're aiming actually to retain 5 to 10% in our purchasing power. Now for Phil, is actually a cryptocurrency engaged in Web 3.0 projects for decentralized storage, but we're actually looking at cutting some losses here because of the huge dip. I think the allocation is already down by at least 50%. So we're looking at cutting some exposures here, if not closing all the positions at all. So our strategy for 2022 is mainly focused on some ETFs. So you already noticed that some of our players are actually ETFs, tracking the energy sector and commodity sector. So that would be in alignment of our strategy moving forward, which is more on fund of funds strategy. So we also have here our objective of increasing the dividend yield at least 2%. So the portfolio actually distributes dividend every month, but as of now, I think the yield is around 1.4, 1.6. So we're aiming to improve that 1 to 2%, and then improve some allocations to UUP and DJP. So this one again is tracking the commodities sector, while UUP is actually an ETF trying to track the US dollar. Okay, so that's why we plan to increase our allocation here, because we're expecting them to benefit from rising interest rates. And our target risk score for this portfolio is actually around 5, but I think we are um, on track in retaining risk score of 4%. So for our second portfolio, we have here our all crypto portfolio. We have here our allocation, of course, 100% cryptocurrency. But if you're going to look at here our top allocations, our top 5, we have here ADA, or the Cardano blockchain. We also have Comp, which is actually more on DeFi. We have QNT, Sushi, and Feel. And then here's our portfolio holdings. If you're going to look at here, we have 15. And among the 15, only one is actually performing in green. We have here Mana. Mana is actually Decentraland. And if you can recall, this is actually among the lead, or the players in the metaverse space. So you have here Mana. So these are cryptocurrencies, and we expect them to be very, very volatile moving forward. That's why you have your double digit um, unrealized losses. Okay, so these are still unrealized losses. So if you are not yet familiar with the different kinds of gains and losses, please check my video on unrealized losses and gains and realized losses and gains. Okay, so we have here a very quick market update. So we have BTC failed to hold support above 45K in December. So we have this first cryptocurrency in the space, BTC or Bitcoin. So when it moves up, the rest of the altcoins would probably move up as well. But since it actually failed to establish support at 50K, then it actually showed a downward bias and the rest of the altcoins followed. So we have also here ADA trading at 1.2 to 1.5. And a good thing that we have here, most of the development community is actually building on Cardano blockchain. That's actually according to GitHub for 2021, but it seems that it's not yet priced in the coin's price, which is now trading below 1.5. And we have also here DOT or the Polkadot, the project on Parachange went live, but I think they have some problems there. Metaverse coins, Mana and Sand. And we also have here Dodge pumping up to zero point 0.2 when they actually uh, received some tweets on um, Tesla or Elon Musk accepting Dodge or Dogecoin for some of the merchandise that they are actually selling. And for Web 3.0 project, this will be the next catalyst in the crypto space together with the metaverse. So what's our strategy for 2022? So we have to improve our position to metaverse coins through Mana, and then probably increase our allocation also to Phil as the entire Internet of Things would transition from Web 2.0 to Web 3.0, and then reduce holdings to 10. So probably we have 15, and in order for us to optimize the result, I think we have to cut down the holdings into 10. And then we have to monitor trend reversal for Uni and Comp, since I think they have been moving sideways lately, and actively trade algo and sushi now, particularly for algo, since we algo is actually one of our most traded assets for this portfolio. So here is a very quick comparison of the portfolio. We have for the multi-asset and for the all crypto, our strategy in multi-asset is more on investing, so buy and hold, while for the all crypto portfolio, that's more on trading, and then we buy and sell most of the time. Here we have fundamental analysis as our main point of strategy, while for the other portfolio we have purely technical. So we look at the charts and analyze the patterns. Now here we have a target risk score of 5 rather, and while here we have 10. And for multi-asset, our position is mostly defensive, while for all crypto, that's very aggressive. And in terms of risk score, okay, so we have here an average of 4. If you're going to look at your average of 4 for almost a year, that's 4. Okay. Well, this one actually pertains to the specific month or for the previous day. But if you're going to look at the average for a year, this is actually 4. Now here, since this is still new for the crypto portfolio, if you're going to look at the risk score here, the average is like, I think it's around 6. So again, our target here is 10. So 10 is the max, so we're still not yet there. But here, our target is 5, so we are actually very, very close to our target. So you can also see here the max drawdown in daily basis, weekly, and yearly. So if you're going to compare the daily here versus here, it's almost like three folds when you look at the all crypto portfolio. Now for the entire year, the max drawdown is 29 for the multi-asset, but for the all crypto, it's, if you're going to look at here, it's almost like double at negative 54% unrealized. These are more on unrealized losses and drawdowns. Now for the history, for the multi-asset, we have a lot of trades here, 115, you know, uh, 1,515 rather, and 78 are profitable trades because most of them are actually still unrealized. And for a 1 year time frame, we only had around 8% realized gain. Okay, that's realized gain. While for the all crypto, if we're going to look at here, 165 trades in a span of 6 months. But if we're going to look at here, the realized gains is 19% versus the 8% here of the multi-asset portfolio with 1 year. So if you're going to look at here, you can see clearly the different strategies of each portfolio. Very defensive here, 8% for 1 year, a risk score of 4. We have here 19% in 6 months, but the risk score here is higher, 6, and target of 10. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.